All right, so we're gonna look at Ethereum. What I'm gonna do in this video is I'm gonna do some real-time analysis, but I'm also gonna do a lot of analysis prior to the current price, because I do want to show you guys how you could have anticipated this entire move down, and how you could actually, catch this trade, maybe catch this one, and how we could also look at the current price to see where it can go next. Are we gonna go up here, or are we gonna go back down, right? So that's where I'm gonna be focusing on for this video. I just want to show you guys that my charts, I haven't actually, this is old, I was teaching one of my friends, this one, old chart. So I haven't done any analysis, I'm doing this in real time and showing you what I'm going to be focusing on. Now, one of the first few things I like to do is go on a higher time frame. Now, I like to go higher time frame because it tends to give me an idea of the bigger picture, an idea of where price is likely to go. Now, I also like to grab my levels on a higher time frame because price tends to gravitate there. Okay, so just an example. So we can clearly see that price has gone down quite a bit since September 13th, right? So 12 days ago. And we can kind of see that same effect over here, where the price went up too fast, this one went down too fast, right? So in a span of, this one was about 6 days or so, this one was about 12 days. So we can kind of see that the price went down significantly, price went up significantly. So price is just retracing back down, right? And so what we're gonna do is we're gonna analyze this entire price action, this entire structure. So before I even move forward, let's look at the 4-hour time frame. Now, I just want to give you guys a tip on how to draw boxes. When you draw boxes and you go in the 4-hour time frame, just know that this 4-hour time frame is only going to be really tradable if you're going to focus on the 1 hour and 15. Okay. If you're trying to get some levels that are way stronger, go in a higher time frame. Because what happens is when you go in a 4-hour time frame, only this information right here is relevant. Okay. If you zoom out, this information is almost irrelevant to what we're focusing on over here on the 4-hour time frame. Now, if you go on a 12-hour time frame, now this information becomes relevant because now when you zoom in, it's still part of the price. And so what we could do when we're trying to grab a box, just an example, right? So let me give you an example. Like right here, this is a good box right here, right? Now, how do we know this is a good box? Because prior to this move right here, we had resistance right here, right? Then price broke above it, right? This was also resistance right here. We broke above it, kept going up. So basically what I'm saying is, if you go to, let's say, the 1 hour time frame, you're not going to catch that box, you see, because now when you go in auto, this is the only relevant information. You're not going to catch these touches. Now you can if you zoom out like this, but it just makes more sense to just go in a 4-hour time frame or a higher time frame and just see it as it is, right? So right here, you're able to see clearly as to where the resistance is, right? So this box right here would actually represent resistance, and this would be what we call deviation, okay? And when we mention deviation, okay, so I'm just going to go through this. Deviation is when you have a floor. This is my definition, right? When you have price at a floor and then price breaks below that floor and then comes back up. This right here is known as deviation, okay? The same thing can be said when you're at a ceiling, so obviously at the top. So price can make its way to the top, okay? So this would also be deviation, right? So deviation is just going below the floor or going above the ceiling and then going back into that range. So essentially, this is your trading, this red box, or I'm gonna make it orange. So this orange box represents a trading range where price is bouncing up and down, and then price leaves that range and then comes back into that range. That's what we call deviation, right? You can search up the actual definition. That's my definition. That's the easiest way to think about it, right? So right here, this move right here is a deviation. Right? We deviated above this range. Pretty much it's manipulation. It's a liquidity sweep. It's a fake out. There's so many names you can use for it. Honestly, you can, use any word you want. Just understand that this is deviation, this is manipulation, it's a liquidity sweep, it's a fake out, it's to fake people out into opening positions, okay? So enough of that, I'm going to go to the actual analysis. So let's start with the daily time frame. So what we can see right here, I'm going to analyze structure, draw some boxes, and just look at a few things, all right? So let's just look at it. So we'll start from over here, from Sunday, August 3rd. So obviously right here, we established our demand right here, right? Price immediately shot up, all right? Pullback, shot up, right? So right here we have a high. I'm gonna label this so you guys understand, but in real time you don't actually have to label this, but you can if you want to be very detailed on your analysis. So right here we have a high, we have a higher high, right? That's indicative of an uptrend, right? And then what happens next? The price pulls back, it forms liquidity. How do I know it forms liquidity? When you see these wicks on the bottom and the top, this is generating liquidity. It's filling in these orders, but it's also leaving a lot of stop losses right below them. Okay, stop loss above this, stop loss below here. Right, so here you have liquidity, and right here you have liquidity. So let's replay real quick. So prior to this, this is liquidity, this is liquidity. Okay, so we have higher high. Now, here's the thing. This right here is essentially going to be your protected low. This is your protected low. Okay, so we don't want to lose this level. So in other words, this area right here is our key zone, and that's kind of why we're reacting over here. Okay, because this is the low that created this higher high. Now I'm going to go more in detail as to how you can pinpoint that the trend was weakening shortly. So this is your protected low that created this higher high, right? So we don't want to lose this low. We don't want to go below it. That's why this box is reacting well here, right? That's why we touched it twice and we went up, okay? So this is our, we can call it our demand. Okay, what we can see during that demand is that price is oversold. Now, I'm going to go more in detail. We have a protected low, we have our demand. This is what started the move, so let me just delete this. This high, higher high. Do you see what the RSI forms on the daily time frame right here? This is a bearish divergence. Okay, when you have a bearish divergence, honestly, we'll just put divergence, but it is a bearish divergence to be specific. What it's showing you is that the trend is weakening. All right, this is an early sign to the trend weakening. So remember, when you're identifying a divergence, it's very important that the trend is, or the market is actually trending. Okay, so we can clearly see prior to price making these highs, price was trending up already, right? We can see that right here from this low to this high over here. So this is the real early signal that the trend is weakening. Okay, so I'm going to label that right here. So when price formed this higher high, this was the early signal that we were already weakening. Okay, now right here we can see we fill in this gap pretty clearly right here, right? We fill in this gap and we establish our protected low, right? Now this is a lot of detailed analysis, but it's really going to help as a swing trader. Day traders might not want to put in this much effort into trading, but of course that just depends on you. So right here you have your fair value gap that ends up becoming your protected low, right? This is where we don't want to lose this level. This creates the higher high, but in doing so, in creating this higher high, we created this lower high on the RSI, showing us weakening signs, right? And that's why the price immediately shoots down, immediately gets rejected, immediately goes back down, right? Now another thing is on the weekly time frame, the RSI is also pretty high up. Okay, so as you go to different time frames, you'll see that we were already showing signs of exhaustion around these levels. Okay, so right here we have liquidity. Now specifically, you have liquidity up here. Okay, this is also liquidity. So let me be clear: liquidity is your entire chart, but specifically when we are focusing on liquidity, we want to identify the right ones. Okay, because everywhere on this chart there's liquidity. There's stop losses everywhere. Everyone is trading in and out of the market. Okay. So now that we understand that we have a weakening trend, let's just say it's potential. Let's say you're not convict, you don't have that much conviction. Let's say you don't believe it. Let's say you don't believe in the charts. You have a bearish divergence showing you weakening signs of trend, right? This is telling you that there could be signs of a reversal incoming. So in order to spot a reversal, remember, an uptrend is up, higher lows, higher highs. Okay. The moment we form a lower high, that's when we get signs of a downtrend. Okay, so right now we don't really have a lower low, not yet, but we could be forming a lower high right now. Right, so I'm going to show you guys what that looks like. Okay, so what you can do, because we have a confirmed high, potentially a confirmed low. So let's see. So price is okay. Price going up. Okay, right here when the price is shooting up like this, we have a confirmed low where our sell side liquidity is. So what we can do is drive a Fibonacci retracement from this high right here to this low, and what that does is it gives us a premium. Okay. This premium gives us an area where price could gravitate to, and also where we can go short if we're looking for shorts. Okay, so this would be our premium, right? And so when price comes here, we might consider shorting. What's nice about this premium is we can also see it's a key level, right? So we can put plus key level, and if we go in a lower time frame, it's probably a fair value gap or an order block or something. So this is already nice. Okay, so let me fix this up. Okay, so here we have our divergence. We have the high, we have the higher high, and then right here we are identifying our premium and key level in order to look for a short opportunity. Because right here, what did we leave behind? Because we are sweeping above these highs right here. So let me label it. These highs right here act as buy side. Okay, so there's liquidity up here. Okay, if price gravitates here, it's going to want to take out sell side right after. Okay, so we left sell side liquidity down here. An easy way to know when there's liquidity is look at the wicks, look at the candles. Okay, this is where reading price action is important. When you see these candles where there's a lot of wicks, there's a lot of people placing orders, a lot of stop losses right below these wicks, right? And there's also a massive imbalance in price. Okay, so from here to here, you have untapped liquidity, you have imbalances. Okay, let's make this a neutral color. So right here, you don't have to. By the way, you do not have to draw this big ass box. You don't. I'm just drawing it so you can see what I'm talking about. Okay, so there's untapped liquidity here. There's a lot of orders, pending orders, waiting to get filled here. is imbalances, there's fair value gaps. Okay, so that already tells you that if the price breaks below this protected low, we are immediately going to go into this gap, into these imbalances. Okay, so this is why this low right here is going to be, I would say, watch this level. If we break below, look to enter or take profits inside the imbalances. So if you're going short, right, I'm going to explain this. So once price makes it to our imbalance, right, or to a premium, where is the daily RSI? The daily RSI is overbought. Okay, now if we understand this wants to come back down and go up, go down and go up, so this is already a good time to look for short on a lower time frame. Today I'm not focusing on the entry model, I'm focused on analysis. Okay, so once we identify a premium, this is ideally a time to go short. Why do we go short? I'm going to explain. Right here we have massive imbalance right here. So at this current candle, there's a fair value gap that's forming. Okay, there's sell side liquidity, and then there's also liquidity at these higher lows right here. What's really important if you're going to go short is that you have liquidity. I have to sneeze. You have liquidity at the bottom. Okay, you need to be able to target liquidity. You need to know that there's liquidity down there in order for price to gravitate down there. Okay, so we have these lows acting as liquidity. You have sell side, this low right here that hasn't been swept, acting as liquidity. You have a fair value gap acting as liquidity. So you have liquidity. Okay, you have liquidity. That's the key word. So once you understand there's liquidity, internal liquidity, etc., you now know that from this premium, the price is going to want to retrace back into this gap for sure. It's going to want to retrace potentially to sweep these lows right here. So if that's the case, I'm not going to go through the entire process. Just put a short stop loss above this high or even above these highs right here, right? So now if you're going to do this, your take profit is going to be below sell side liquidity. Okay, so now we're looking at this. Now that we understand where our short is, right, because it's a premium key level, we understand we're targeting opposing liquidity. Now we're going to identify this low. So I'm going to delete this. Remember, this is our protected low. Okay, watch this level. If we break the low, look to TP much lower. So this green box could act as taking partials. You can take some profits here and then hold it, you know, for price to fill in these gaps out here. So if we're going to focus on the next key level, we can see there's a gap right here, right? We could definitely tap this gap, and we have lower gaps even over here, right? So this entire area really is going to be the level we're going to focus on. Okay, so I'm going to draw a box here, and so this is the analysis we're looking at. So I'm going to go explain this as, you know, as is. We see that the price rallied up a lot, right? The price went up a lot. It's trending up. It's forming higher lows and higher highs. But the moment we formed this higher high right here, and then we formed a divergence, that showed us weakening signs. Okay, now the price retraces back down, and this allows us to consolidate right here, right? This is consolidation, accumulation, manipulation, and then distribution. Okay, so this is what we call AMD. Okay, but of course I'm not sure I'm going to even keep that here. We'll see. So I'm not liking that one. Maybe right here. That's fine. Okay, this right here, manipulation. If you want me to go in detail about AMD, I can do that in a separate video. So AMD, and then after AMD you get distribution. All right, so looking at this higher high, this is the first. Well, okay, so when I first initially saw this chart, I didn't do the markup. Like I said, I have a lot of charts here. I didn't do any markup. I'm doing this right now. So when I first saw this higher high, this already told me, and then I saw lower high, I already knew price was going to go down. And then the moment the price started accumulating here, generating liquidity, I knew we were going to go much lower. It was just a matter of where the manipulation was going to take place, right? So the manipulation obviously occurred at the premium, which then presented a short opportunity. Price then distributes back down to sweep sell side. So let's actually show that. So right here, okay, perfect. Price then sweeps sell side liquidity, and it looks like we even sweep this protected low. All right, this is not the type of reaction you want to see right here. Okay, so when price swept below this protected low, that's not the type of reaction you want to see. That's telling me that price is likely going to come back even lower, because now we've taken out this low, and the likelihood of us going lower becomes higher. Okay, so then this higher high, this then becomes our lower high. So right now, currently, the market is in a downtrend. Okay, we're getting our this 4,700 was our first sign. Well, this was the first sign. This was the second sign. This was like the confirmation. And then once we started breaking below it, we got rejected right here. This was our third confirmation of price going to 3,900. Okay, I'm gonna see if I can. Okay, something like that. Hopefully that's not too confusing. Make this a different box. Okay, we'll just change color. Okay, so right here we have our higher highs, and then we had our first lower high, and then right here we can see that the price retraces into the gap, bounces back up temporarily, but gets instantly rejected, giving us our third confirmation of price going even lower to sweep sell side liquidity. And then this would have been another short opportunity. So short here, okay? These are two short opportunities. I'm going to circle them. I'm going to label them red. Okay, so the red is going to be represented as our short opportunities. If you've done the markup, then you should be able to identify these two as short opportunities. Okay, so just like that, by doing the work, you can easily identify this as short opportunity. Now, if you want to identify this one, just know you have a confirm high, confirm low. Just identify premium from here to here, and we can see right here. Let me get rid of the 0.5. We can see. Wait, where did this one come from? Hold up. I'm seeing like multiple. Okay, let me get rid of this 0.5 really quickly. Okay, so there's two of them. Okay, that's what it is. There it is. Okay, so right here from this confirmed lower high, we have a confirmed lower low, or low right here. So what we can do is draw our fib here, and then we can see it reacts perfectly at our 618. If you see this right here, this gives us two short opportunities, right? 1, 2. Okay, this 618 is also your premium, so you have two short opportunities there, and then you should have been able to capture both of these trades. Okay, so this is the markup, right? This is how you could have identified where price was going to go. And then from here, like I said, watch this level. If we break below, look to TP much lower, then obviously the green box becomes your TP. So currently we're at the green box. This is where we expect the reaction, depending on how we consolidate here. So this is going to be our watch this level next for potential long setup. So this is currently where we're at. This is where we ideally want to see a bounce of some short term. Now, if we don't, that's perfectly fine. You know, we're in a downtrend right now. Okay, we've left some bearish gaps. Right, we're still kind of retracing back down. I think it's too early to say that we're going to go back up. In fact, I would be making plans of price, you know, going even lower. So if you look at the fib, so let's go from this high to this low. We can see that we are inside of our discount, but our discount is between 39 and 37. So remember, this is the box I already drew prior. So yeah, in my opinion, just watch this box for a long setup, but I think it's too early. The way that the price moved, it's kind of pretty aggressive, so it's telling us that sellers are still in control price. We can definitely watch this trend line to see where price leads us. So this is going to be somewhere in, so let's look at this. We have a touch here, touch here, touch here. If we drag down, we're somewhere between October where we could see a touch. Okay, so if we account for this deviation over here, okay, let me see, hold on, let me do some real-time analysis right now. If we account for some of these deviations down here, so what I could do is draw a parallel channel. Now this is more on the analysis side. As a trader, day trader, you might not even focus on this. Something like that. We can look at this zone to be tapped eventually in the future, so somewhere into October. Now this is very far back, so this might not even touch until November. So this is where becoming an analyst is about trial and error. Right, so we've already broken this one, so this is not a good one to focus on. But we can focus on, let's see. See, being an analyst is actually not that easy. It's really not. Because we have to identify an area of confluence. Okay, we have to identify, or we have to pinpoint where price could drop to. So something like this. These would be like deviations. This would act as a green box. So, in other words, we need to watch this zone right here. This is clearly a fair value gap right here. I'm not going to have too many boxes because I think the boxes can get quite confusing. Right? Obviously, this is the first box we're focusing on. This is a FVG plus key level plus discount. Now, you're probably wondering, if this is a fair value gap, key level, and discount, why are we not entering? It's not about entering as soon as price touches this level. It's about seeing bullish price action, seeing a market structure shift, right? So right now, price just got here. So if you're a scalper, you bought here. But if you're a day trader, swing trader, you might be waiting for more price action to establish some positions. Okay, so like I said, this level I'm going to be looking at. Could even get some better ones if I'm really... See, this is where you might have to play around with stuff. See, that's not going to work out. Maybe this will work out. See, trend lines, like, by the way, giving tips on trend lines. Some of you guys don't use trend lines, but there's no really much of a wrong way to use a trend line. Like, for example, like right here, this is a valid trend line. Price hasn't touched it. See, price hasn't touched this trend line, but it could definitely touch it in the future, right? You never know. as far as where price can go, let's look at the higher time frame. So if you look at it, now we have more price action here. We can drop back a little lower over here. This is where the key level is. How do we know? Look at this touch right here. So in other words, this entire zone right here is our key level on a macro scale. This becomes our macro level. If we lose this macro level, the likelihood of us dropping anywhere here becomes high. So in other words, we do not want to lose level, which I think is pretty clear given that this is a multi-year resistance. If you go to another chart, let me show you guys what I'm talking about. If you look at this, yeah, right here, this is a right here. This is a multi-year key level right here. So we do not want to lose this level, obviously. Okay, so losing this level would be catastrophic. I don't think that's going to happen anytime soon, but if it does, be prepared for it. I would say this is the level we want to see consolidation occur. This is going to be our macro level. If we lose this macro level, have the expectation that price will go back down to the 32, 33. But for now, so let me go to current price so you guys don't get scared. Focusing on this macro level, we also want to put some emphasis on this fair value gap. So we're going to watch this fair value gap. Now, hopefully this is not too confusing with all the boxes going on here, but I really did go through this step by step on the things up here. So really we're just focusing on the purple and the green box and this gray box. So we're watching this entire zone on a macro level, and we're focusing on this fair value gap for a trade, basically. Other than that, I think that's pretty much it. There's really not much you can do aside from wait for more price action. I could dive into some higher time frame, weekly, monthly time frames to give you a macro outlook, but honestly, I think we should emphasize on trading level to level as opposed to trying to anticipate the future. I think if you're an investor or a swing trader, maybe that's more relevant, but since most of you are day traders, it's not really that relevant. So hopefully you guys are able to understand how I got these two short opportunities, how I was able to read that just by looking at what has already happened, right? So by the way, these two are good short opportunities. If you missed it, you have to study this, and all of this. Okay, all of this. So let me be clear. Let me be more neat. Everything right here, okay, from here tells you that this was a short and a short. If you can't identify that this is a short by looking at what has already happened, then you're doing technical analysis wrong.